Alrighty, guys, welcome to tonight's charting session. Hopefully, everybody is doing well. Happy Sunday. Hopefully, everybody's been enjoying their weekend and ready to get back to it this week. So, tonight won't be going over too much. I don't want to keep you guys here. I want you guys to enjoy the rest of your night, but I do want to cover some things about what we're looking at going into tomorrow. I want to talk about the trade that I took on Friday. Take a look about some news as well, and any trades that you guys took on Friday as well that we want to review. So, first thing that I want to talk about is going over the trade on Friday. So, trade on Friday, I took a short later in the PM session. Zooming into the 1 minute, entered right here. Stop was here. And I was looking to see us sell off to sell side. So, looking at this, you might say, Justin, what was the really entry here? And the entry that I had for this was actually on bigger time frame, and it was really the whole reason of why I took this trade. I wasn't trading the internal model. I was trading really the external model. And the reason why is because going into the PM session, we had this propulsion block to the left of us, and on this kind of way up, there was really no reason that this wanted to go higher in the way that I was looking at it. And the reason why is because, number one, looking at ES and where we were at the time, ES had finally taken the external buy side level. So we've actually worked our way up in the morning. PM session ends up pumping, taking out that external buy side level, and NQ is nowhere near taking this level. So I recognize, okay, we're in this propulsion block. We're having SMT. No form of sell side has also been taken here. And looking on ES as well, we have, again, all of this generated sell side, which I'm still expecting to get taken going into tomorrow and going into the rest of the week, right? We have all this generated sell side liquidity, right? All of these lows stacked up that we have not taken a single one of them, right? When we look at this, we know this becomes generated liquidity. So this becomes buy side of the curve. When we have manipulation, I then expect us to rebalance and take out all of these lows and then this external level, and then also these lows here as well. So going into the PM session, when I saw ES take that high and NQ did not, I was looking to see the internal manipulation, which I'm looking for a one move higher to hunt buy stops and then displace, right? So I'm zooming in. Nothing really here in the morning. Moved our way up, took in this external buy side level. I'm waiting. Had this move back down. This is really the kind of probably the move that trapped a lot of people in a short first. But this is when there was no internal manipulation here. So we're consolidating. Boom. We had this last move up. We end up forming another SMT on the external SMT as well. Once I saw us start to displace, I entered into a short once we ended up tapping the 1 minute. So I was waiting to see it get respected first. I was waiting to see an imbalance get respected for me to enter. The first one was here. I was waiting for this to get respect. We came back up, immediately ran through it. I was like, all right, we're not ready yet. Sell off. I'm waiting. We tap this 1 minute fair value gap. Once this gets respected and we sell, I immediately jump in with, again, notice this is a more looser, not insanely loose, but this is like a 22 tick stop loss. Because I wanted to give this room based off of what we were looking at on the bigger time frame, right? I was expecting the SMT to come into play. And again, looking at the bigger time frame, it ended up setting up so nicely, right? Because where we are right now, we know that the draw is most likely going to become this low. We have displacement lower. Not only is this move higher in the morning and throughout the previous day, moving back to, again, where are we moving back to? OTE of the range. So we have this whole range that we ended up creating in the overnight session and from Thursday all the way back down. We move up into the propulsion block back to OTE of the range and discount of the range. And then we have this SMT here showing the manipulation, showing the propulsion block what's most likely going to hold. So now what I'm looking for an entry is I'm looking for manipulation, right? I'm looking for either a rate on stops, and I'm looking for displacement. And that's what we had here. We had consolidated. This is what I want to see become power of three. Manipulate the highs. Once I see displacement, I jump into shorts and end up riding this all the way down. I took most of my position off here, and then I let my runners go. We end up continuing, and then last push down right here, I got ticked on my last one, and I was fully out of that position. So this was a really, really nice short setup. You can see the standard deviation ended up just being met here. Notice perfectly tapped this, starting to react. Again, once we react off this, where do we expect to go after standard deviation? Discount of the range. So this previous range from the original manipulation move here, we've ended up selling all the way back off, creating relative equal lows, distributing back to equilibrium of this range, right? We end up creating equal lows, moving back up, tapping equilibrium of the range before continuing to sell off into the projected target. Sell side gets taken. We bounce off. I'm expecting price to most likely move now back to discount of this range. So looking at where we are right now and talking about what we're looking at going into tomorrow, I am still pretty bearish going into tomorrow, especially looking at where ES is at. ES is at a point in time where I want to see us reject off this volume imbalance. And depending on what happens in the overnight session, I really hope we don't just sell off in the overnight session. I would like to see us kind of chop around here and then look to see manipulation. But I want to see this area start to hold. We can maybe come up a little bit more. But I really want to see something like this. Because in my opinion, this makes sense in where we are in the model. We have buy side swept. We have all of this low resistance liquidity. I'm expecting most of this get taken and then also continue through these lows to these equal lows down here. Again, finishing this projected target of where we are right now. Keep in mind as well, we don't have any SMT here. So the bullish bias of what we could possibly be looking for, I mean, actually, technically, we do have an SMT here. But this SMT, I don't believe, is going to bring us all the way back to these highs. And the reason I say that is because it's not the external low. We have all of this generated sell side, meaning if all this generated sell side and this is an SMT, I don't believe this will run through all the way back to these highs. I believe that this is still going to look for sell side, but it really all depends what happens in the overnight session or not. So that's really going to be giving me my bias. So I'm going to have a loose bearish bias going into tomorrow. I want to see what happens in the overnight session. We'll reevaluate our bias in the morning when we hop on the call and figure out whatever we did in the overnight session. If we end up selling off in the overnight session and this level is taken, which I don't really expect it to be. I mean, again, actually, that's not really that big of a move. We absolutely could sell off 80 points in the overnight session. But if that does happen and we wake up and we are at this area, I'm going to be very, very patient, right? Because once this is completed, once this low gets taken, I expect a continuation through here, but immediately, most likely a rebalance. So once all of this low resistance liquidity is taken and this external low is taken, I'm most likely not looking to touch any sort of short until we get more structure of what we want to do, right? Because I'm expecting once this internal low, there's either two outcomes of what I'm expecting here. We either come down, sell, take this, and then immediately rebalance, or we just immediately dump through this level and we end up selling back off and we have no hesitation and we just dump all the way back to these lows as well. So whatever happens when we actually get there, we'll look for the response for it. But it all really depends in what happens in the overnight session. So any questions on that trade or the bias going into tomorrow? I do want to take a look at news real quick. No news Monday, so we are going to be lowering our size going into tomorrow. Tuesday, consumer confidence, nice. Jolts, 10 a.m., beautiful. Wednesday, we also have FOMC statement and FOMC press conference. So, Wednesday, we have FOMC. What are we doing? What's the plan? This is what I'm probably thinking going into the day. Most of the time when we have FOMC, I like to move our sessions to the PM. Because most of the time in the AM session, we are generating liquidity and we don't have manipulation until the FOMC statement. So possibly we might move our session back from the morning to the PM and actually trade the FOMC statement, because a lot of the times we've traded it in the past and I want to show you guys and do a lesson on how to trade FOMC, because a lot of people don't know how to trade FOMC. FOMC does pretty much the exact same thing every single time we have an FOMC, and I want to trade that live with you. And just a short summary of what that is going to be is most of the time when we have, again, it doesn't seem like Powell is speaking though, so wouldn't it say Powell speaking? I'm not sure. But when we do have FOMC, a lot of the times the first 20 to 15 minutes, the first 15 to 30 minutes, I would say, is going to be the manipulation. A lot of the time it's going to be the fake out. We're running stops. We're generating liquidity before having that manipulation move and then selling back or pumping back in whatever the external draw position is. And then that's where we actually look to trade. So we let the first 10 to 20 to 30 minutes settle until we recognize whatever that manipulation is and then look to play the way back. Yes, that is correct, Debo. Yep, manipulation, then distribution every time. What was that? Oh, did you take a long around 155? Oh, yes, I did. I did take a long with, I took along with like 2 contracts. Here. Off this order block. So the reason I took this long is after this low gets taken, this to me looked like a nice power of 3 because of the lack of displacement through this low. So we had this internal low. External sell side been taken. Once this gets taken and we hesitate to go lower and we have this big displacement move up, we have all these equal highs here. Looking at where ES was as well, we had the same formation. Sell side had been taken. This becomes the internal sweep of sell side, and then this imbalance gets ran through, right? Once this imbalance gets ran through, I know we're most likely going to go to whatever the recent high was. So it was this. And we had all of these stacked equal highs here on ES. So on NQ, when we ended up coming back, again, retracing back to OTE of the range, tapping OTE in the order block, past in the previous fair value gap. We had these equal highs here, as well as this internal high acting as buy side. And then we ended up moving back towards the upside. And this, to me, looked like a nice accumulation here. We had manipulation, distribution to the upside, and then I was expecting these highs to get taken. And then, again, rebalance to equilibrium of the previous range. And if we draw it in, you can see we ended up tapping perfectly back to discount of the range. Right here. And again, the things that we talk about every single time repeats. Every single time where you're like, oh my God, wait, it kind of seems like the market's doing this a lot. That's because the algorithm is built on this. Every time some form of liquidity is taken, again, what the number one thing we always talk about, right? There's 3 reasons why markets move. Hunt liquidity, rebalance price to equilibrium, and rebalance inefficiencies. Every single trade that I take on live with you guys is going to have a bias of what that is, right? So when we come down, sell side, the objective has been taken and we displace higher, this becomes the internal model. But on a bigger time frame, what do we expect to do? We expect to rebalance equilibrium. So when we continue lower after we expect rebalancing equilibrium and we respect 2 to 2.5, again, what do we expect to do? Rebalance the equilibrium. So we're probably in a internal buy side of the curve here, working our way back up to equilibrium. This will probably be taken, not taken, but we'll probably rebalance fully in the overnight session back here. So most likely expecting something like this. Can you explain why you went higher size on Thursday and Friday? Just because there was more structure to form a bias? Because, okay, notice, why did I up my size on Thursday, Friday? But the rest of the week, I was very risk off. Also, notice the action. Notice the action we had on Thursday and Friday versus the rest of the previous week. Was it better or worse on Thursday and Friday? In my opinion, it was a lot better. Now, when I recognize my job as a trader is when I know there are reasons going in. Also, keep in mind, there was new news on Thursday and Friday. When I go into a no news Monday, again, we talked about this in the previous session as well, but there are things that I know and I can recognize that are going to give me low probable action. So why should I be trading full size on low probable days knowing there's a higher chance of me actually losing and I'm just going to end up, losing capital? We talked about before, the market is constantly providing you opportunity. That opportunity is not trading. That opportunity is to improve on aspects of your trading that will improve your trading in the long run. When we have choppy action, when we have overnight moves like 100 points, when we have no news Mondays, whatever it is, that gives you the opportunity to work on the part of your game that you don't want to work on, which is capital preservation, being more patient, being more disciplined. And whenever I come on live, you guys recognize when I trade and I have losses, and I have wins, I'll take $1,000 loss. But when I win, I have a 7K day, 10K day, because nobody knows, and a lot of people in the space can't recognize when and when not to be offensive and defensive, and it all has to do with conditions and recognizing market conditions. Thursday, Friday, why do I expect to see good action going into the day? Not necessarily going into the day, but what are things that I can know that'll automatically give me a better advantage going into the day? Red folder news. Red folder news, if it's not FOMC, FOMC is still a good day, but it's still going to be a little bit more volatile. Red folder news days are going to be better action days, more volatility. No news days, lower action days, less volatility, okay? Overnight sessions. Did we chop in the overnight session? Did we have seek and destroy in the overnight session? Did we end up moving 100 points in the overnight session, right? All of those things are going to affect my bias going into the day because that is how I'm going to know what kind of action I'm going to get because I know how the market moves. The market moves in waves. We have accumulation, we have manipulation, we have distribution. What happens after distribution? If we have a 100-point overnight session, what do I think I'm going to do at the open? What do you think price is going to do? Most likely consolidate, most likely chop, right? Now, it might not do that, but again, why would you bet money on it might not? right? You want a high, I have confidence in this, let me put price on the table, right? And one of the best analogies I like to use as well is trading convicted models versus not trading convicted models is like being a banker. Let's say somebody comes in your bank and it's a homeless man and he's like, "Hey, I want to make a business. I want to make a business. Can you lend me $10 million?" I've never worked with this guy before. I have no clue if he actually makes money. He's homeless, but he has the potential to make me money. He has the potential. A lot of you guys go into the market giving money to the homeless like this. Now, okay, that's a bad analogy because giving money to the homeless is good, but you're giving money to somebody you know has the potential to give you money, to make you money, but in reality, you know you shouldn't be taking it. But you go into the market basically taking it because you're focused on the outcome. You're focused on the potential of it making you money. Instead of saying, hey, let's say somebody comes into the bank. This is a businessman who's made you money before. You've worked with him before. You've known him for a long time. That's a probably better investment, right? It's the same thing with trading. I go into the market looking for the exact same models I know work for me every single time and I have conviction with. But when you go into the market looking for opportunity that'll make you money, that could be anything. You could click buy and sell at any point in the day and possibly make money. But that doesn't mean that's what you should be doing. It's not what you should be doing at all. Do we understand this? And that's a lot of things that people hold, that a lot of that reason holds a lot of traders back. And it's focused on, again, the bad mindset is being focused on opportunity that does not exist. You just want to trade because you need some form of dopamine. Been here learning and growing about 10 months. At first, I didn't believe in an algo or none of that. I had viewed the market like an auction, and over time heavily have started to believe in the algo. I see the same things happening over and over and over again, and it blows my mind. I love to hear it, brother. Love to hear it. I love pulling people into the rabbit hole. Interested to see your bias on the NQ weekly. Yeah, let's talk about it. Let's check the weekly. Again, this is my draw, right? This is my draw here. Noticing the weekly, this also aligns with a bearish bias going into the week. We have a massive weekly imbalance here that we have not rebalanced. Also, keep in mind of this weekly candle. This is a weak candle. This is basically not exactly a doji. It would have closed, a little bit closer. But we have this massive wick. This is showing a lack of strength to the upside, showing this. I want to see this roll back over and retap this weekly imbalance. So again, aligns with our bias going into the week as well. I noticed in a market maker sell model that we took buy side and then displaced down, eventually forming that first bearish fair value gap. But we have disrespected it and ran right through it to go manipulate and take out the most recent high before dumping down and completing the sell model. Is there a way to tell when price will fake you out like this and manipulate the highs one last time before dumping? Notice there's no displacement through this low, right? When we're looking for displacement, that doesn't mean just sell. It needs to be through a level that is going to create a shift in market structure. This is what we're looking at right here, this low. When market comes back down and we end up breaking through this, I want to see a follow through here. There's no follow through. So when there's no follow through, this becomes an internal market maker sell and buy model. We have buy side of the curve or sell side of the curve and buy side of the curve. This works our way up to take buy side. Now, why is over here more probable than here? Because we've had manipulation internal. This is not manipulation. This is buy side being taken on the bigger time frame. Zooming in, this is internal manipulation because we have consolidation, stopping out all these traders and then immediately dumping back down. You can see price is running again back to discount right now. We'll watch this. It should work our way back up to this level. I know there's a price delivery system that bases liquidity injection based on time. I forgot the name of it. Would you by chance know what it's called? A macro? 126.24, $721 going into the day. I didn't know where I wanted price to go, but price was telling me more bullish, but was skeptical about it. Price tapped into a daily fair value gap, instantly displacing out of it. I moved down on the 1 hour time frame and noticed that the market respected an order block and didn't take much time inside then displaced. I dropped on the 15-minute chart, waited for price to fill an imbalance. We also created an SMT at the lows, moved to the 1 minute and marked a fair value gap, waited for it to retrace back into it, set my stop at the lows, made my TP to the next draw in liquidity. Looked at the S&P to see that it swept high, so took my position off 3 ticks away from my final target, ended the day green. Beautiful, brother. How many of you guys, I bet a lot of you guys took this trade on Friday. How many of you guys took this long? Me, I took it, me. Yeah, a lot of you guys, I would have bet. Yeah, this is a great setup. Again, bigger time frame. What are we doing here? What are we doing on this way down? Notice also the lack of displacement lower, showing that we really don't want to go lower here because we're displacing through none of these lows, right? I like how I have this marked. Displace, move back to OTE of the range, move back to equilibrium. Displace, move back to equilibrium of the previous price leg. Displace, move back to equilibrium. And this SMT is showing us we want to have that price leg. So what are we looking for an entry? Displacement through a high. Notice all of these highs is going to become generated buy-side liquidity, which again, we expect all of this to get taken at once, which it does. Brrr, immediately runs through all of this generated buy-side. What's our entry here? Right here. First time that we actually get displacement through a high, pull back to the fair value gap. You can see this tapped the breaker here as well. This is going to be the internal breaker. Wicks back down, taps the breaker, and then immediately runs to buy side. And then again, you took it off great at recognizing the SMT with ES as well. Beautiful, bro. This is a fantastic trade. Took this trade on Friday on my own to gain confidence during the AM session. I wanted to trade it what I believe was models out of models. What are your thoughts? I really can't tell why you took this trade. There's not really enough information by looking at this chart to tell me why you took this trade. Took this inverse fair value gap to the upside. Yep, the same trade. Looks great. Clean. Except your PT here, yeah. Your PT here is way too close. Was it back test in which why the PT was so short? Yeah. Yeah, that's fine. Yeah, again, great entry, great trade. Definitely could have let this run. But if it was a back test, you're good. On this trade, we swept relative equal lows with displacement and broke structure to the upside. I entered off the bullish fair value gap, aiming for the equal highs in standard deviation. I saw that we started slowing down and were disrespecting bullish fair value gaps. I also saw that we were respecting the order block. I ended up getting stopped at break even after we rallied and started disrespecting BISIs. I now know that I should wait for a second stage manipulation before entering, seeing how we got rallied. Let's see. Did we tap this SD? Did you get stopped at break even here? Or no? Yeah, I was about to say this still looks fine. Oh, you did? Okay. What I will say about this is there's trades when you should recognize when to let the market go and when to put your stop at break even. Because I entered on your stop. I used your ass as liquidity. And I mean that in the most friendliest way possible. But there was nothing here that invalidated this long. Because again, recognize the bigger time frame model. What are we doing here? This is just pulling back to OTE. And recognize the structure. Recognize the structure. Notice, when we move higher, what happens? 1, 2, 3, 4, 5 candles. We end up, this whole entire move. 5 candles to the upside, we end up just running through, right? Showing the strength that we want to go higher. When we end up rebalancing price, what are we doing here? 1, 2, 3, 4, 5, 6, 7, blah, 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 blah. We end up sitting here and just slowly regaining price to the downside, slowly rebalancing before, again, big move up. You have to recognize also reading price action, right? What is price action showing me? Strength versus weakness, right? And what are we also doing here on this way down? Generating internal buy side. All of these highs, notice none of these highs get taken. 1 here, 2, 3, 4, 5 before running it all at once. Let's see. Tried to long NQ pre-market off this unicorn entry to target buy side. Looking back, I'm thinking this didn't work because sell side wasn't swept. Also, there's no displacement here on the bigger time frame. Yeah. Again, what does this look like is clear to you too. Sell side wasn't swept. And what does this then become? This moves higher to, again, rebalance price and create generated buy side to then get run later on. But also the biggest thing that there's no reason, again, a breaker doesn't mean anything without context. A breaker does not mean anything. A unicorn model means nothing. A unicorn is not some magic fucking strategy that's going to make you $1 billion. If you have no context with a unicorn, then it doesn't matter, right? So why does this fail? There's sell side was not taken, right? Sell side's not taken here. So there's no reason for us to bounce higher, right? Looking at here, when we have this breaker, this might be a breaker, but a breaker doesn't matter when the draw on liquidity is still lower. All has to do with context. Seen price revisit a 4-hour fair value gap. After this, I spotted a 1-hour order block that was invalidated, so I moved down to a lower time frame, 15 minutes, and I seen a bullish order block above sell side liquidity. This got swept, made an SMT at the 5-minute. I moved the 1 minute and saw a strong displacement from the second. Revisited the fair value gap, would have entered, probably would have found a better entry on a lower time frame. Honestly, me personally, I would not have taken a long until this imbalance got ran through. But it doesn't really look like there was really an entry here. There might have been on a lower time frame. What time frame was this? The 1 minute? Yeah. I really wouldn't see an entry here. I mean, you could take this inverse and just slap long after this gets ran through, but with kind of the action of what we were looking at here too, I wouldn't really see a trade, to be honest. When using SMTs, would you consider overlapping SMTs higher probability trade? Yes, absolutely. Yes, absolutely. Always, always, always overlapping. Because again, it just continues to add conviction to your already existing bias. An NQ for the trade you took, would you consider that a breaker block at 11 a.m. on 15-minute? At the highs, that would be considered resistance. This is a propulsion block, not a breaker. So this is a propulsion block, not a breaker. We'll go over a propulsion block real quick. Propulsion block is an order block that does not get displaced through. So again, up close, down close candle. Why would this not be a breaker? A breaker gets displaced through. On a bigger time frame, you see I have this marked out like this, right? I have consequent encroachment in the high and low. So looking at the 30-minute, right? I have this whole move of this up close and down close candle, right? This is a propulsion block. This is a point in time where we come up higher, immediately retrace. Notice it's an up close and down close candle. When this sells back off, if the delivery of price has not finished its objective, which is sell side here, I don't expect this to run higher, especially when we have an SMT here and we've moved back to discount of the range. A breaker gets displaced through, meaning this gets ran through and then retraced. And this still would not be considered a breaker if we did run through this. Actually, I guess it would, but not. I wouldn't consider it one. Maybe on the bigger time frame, but again, bigger time frame, that it's no longer a breaker because the 4-hour, if I zoom out, this is no longer here. Would you consider the current 15-minute a market maker buy model, or do you think we will reject at equilibrium and move lower? I do. Yeah, I think we go lower. Again, why would I not try to trade this right now on a buy model? Okay, the only way I would trade this is to move back to equilibrium, right? That's the only way. So what would I look for if I'm looking to trade this? Look to see if this imbalance holds. So the only way I would look to trade this is if this happens. We retrace back. I look for the internal model. I zoom into the 1 minute. If we get displacement, I could take a long, targeting equilibrium. But the external draw has not been taken yet, so I still expect lower. But I know we most likely go back to equilibrium because the SD of the initial internal manipulation has been completed. So now we go back to discount. Thoughts? Yes, this is clean. Very, very clean, brother. Looks great. Let me see here. Yeah, I think we're honestly looking good. I'm expecting some good action. I'll probably end up trading my full size this week, except for Monday. Again, no news Monday. A lot of time, lower quality action. Again, recognizing when to be offensive versus defensive. Do not dig a hole for yourself early on. Justin, that sell you took there on your screen, why did you enter like that? Doesn't that go against what you teach or kind of like your plan? Not at all. Because I'm not trading the internal model. I'm trading the external model. Which is actually, okay, internal model inside of the external model. Don't get like complicated on what I mean by that. When we come back up to this propulsion block, I'm trying to figure out why you think that. Is it because I didn't goes against your plan? Why do you think this would go against my plan? Let me ask you that first, because I don't really know why you would think that. Bullish or bearish breaker? Bullish breaker. We go higher. It's bullish. Bearish breaker. We go lower. But again, there's context here. There's context here. What is the context? This is context. This is context, right? This is context right here. This is context right here. This is what we're looking for. This is our entry model. This is what we're looking for. Does that make sense? This is big. This is big right here. This is huge. Because this means nothing without this. Yes, sell side and SMT gives context. Why should this breaker move higher? Why? Because sell side's been taken and we have an SMT at the lows. When we have nothing here and like sell side's down here and the draw hasn't been taken, there's no reason for us to move higher. There's no reason for this to hold. You're just like a normal pattern trader if you're trading like that, right? You might as well just be trading breakouts. It's literally just that. Without context, it means nothing. Change in the state of delivery. So change in the state of delivery is a little bit different than a market structure shift. All it is this low. So like looking at the 15-minute, this becomes change in the state of delivery. It's the candle. It's the body of the candle. I would recommend watching a video on it. I'm not going to explain it as best as some other people in the video because the context of it is pretty much the same thing as a market structure shift. It's just a different draw. It's just different drawing it in. Because you can have a change in the state of delivery without context. You can have a change in the state of delivery without displacement is what I meant. Thoughts? I guess taking displacement, SMT up there, moving back. Yeah, this looks good. I like this. I would say leave a runner here, though, because you know we can continue to sell, right? The way that you're positioning sell, okay, great. I like looking at this trade because this is going to help me explain something. Recognizing when you can let your runners go in relationship to the model. This is your low-hanging fruit, right? We know this is your low-hanging fruit. We know this is easily going to get taken. But when you're thinking about this, when we get to this level, do you really think we're going to bounce? We can, but the way that you structure yourself, we've had this massive move to the left, which meaning you're basically trading, which is going to retrace back to either OTE of the range, equilibrium of the range, or the next form of sell side. So there's a reason for us to continue lower. We have an SMT at the highs. We've manipulated this internal highs here. Let your runners go here. There's a reason for us that we would continue lower. When I finally realized getting the draw/bias right always comes first, top priority, then the model, regardless of what you pick. Exactly. Absolutely. The draw on liquidity is the most important thing of what you need to be focused on. Where is market drawing towards? That is the number one thing that you should be looking for. If you're looking for trades, if you're looking for entries, without understanding where the market is drawing towards, you're behind. And you're going to get chopped up. And you're going to be like, why am I losing? Because you have no idea where the market wants to go. So you're basically just trading patterns. What gives you the conviction to have a runner to not having one? If the internal model and what I'm targeting has no reason of going higher or lower. All has to do with the relationship to the model. All has to do with the relationship to the model. For example, let's say I'm taking a long. Let's say we have buy side here. Let's say I'm at alt, let's say there's buy side here. And let's say we have all this structure. But let's say to the left of us, there's nothing here. Let's say this is just one massive imbalance here. And the draw on liquidity is lower. Let's say bigger time frame. This is our sell side level we're looking at, right? We know the draw is lower. And we have something like this. I take it long. Should I leave a runner here? Yes or no? Now, this question is also, it depends on who you are as a trader. Me personally, no. I am not leaving a runner here. Why am I not leaving a runner here? Because there's no reason for us to go higher. Can we go higher? Yes. But should I be putting conviction and money on the line on a if? No. I should be putting conviction on line or money on line for something I have conviction in. Why am I not putting a runner here? Because bigger time frame, the drawn liquidity is lower. Bigger time frame, there is an imbalance to the left of us. Bigger time frame, we just ended up taking buy side. What do we expect to happen here? Manipulate here, continue lower to the external draw. So if I'm trading the internal draw and I'm targeting buy side, whatever the model is showing me of where my target needs to be is where my target needs to be. It doesn't matter if I think the market's going higher. If the market is showing me where my PT needs to be, it needs to be there, right? So I take a long, and I'm not leaving a runner. I take a long here, and I'm taking most of my contracts off here. Because I know, in relationship to what this model is, there's no reason for us to go higher. This move is simply retracing back to discount of this previous range, stopping out all of these buy stops, right? All of the traders that have been trailing their stop loss along all these highs get stopped right here, generates the sell side, smart money gets in shorts, and we end up dumping to the external draw. So runners all has to do with context. Everything that we are trading has to do with context, and it all comes with experience. Does this make sense? I want to make sure everybody understands this. Okay. Good. Now, what are we doing here? What does this look like we're doing on this way down? We're rebalancing, but what are we also doing? Exactly. We're engineering buy-side liquidity. All of these stacked highs. Notice, Justin, why would you short this? It's a propulsion block. I don't need buy-side to get taken for me to take a short model because I know this move higher is generating buy-side. Why is this generating buy-side? Because no form of sell-side has been taken, and we've had manipulation. This SMT marks manipulation. ES runs higher, NQ does not. There's no reason for us to go higher here. Now, why can I leave a runner here? Why is it good to leave a runner here in this example? Because there's a reason for us to go lower. There's sell side here, and standard deviation hasn't been met yet. Now, once SD gets met, I take it off. But all of this is going to become a future target. All of this is going to become generated buy side. That will eventually get ran. After sell side is taken, after we've rebalanced price on the bigger time frame. When you start to think of the market in this way, you'll be able to read price in which ways you've never thought before. Because this is why the market moves. When you think logically about why the market is doing something, what are we doing when we're actually moving, and how can I know I'm going to take advantage of this in the future, is how you need to think. Every single point in time in which the market is constantly providing you data gives you an opportunity to look at how you can take advantage of that data in the future. Because we're either doing something of three things. We're hunting liquidity, we're rebalancing to equilibrium, or we're rebalancing to an inefficiency. Light bulb? Love it, brother. It's experience at the end of the day. You have to see it a couple times. Absolutely. You have to see it over and over and over and over again to build conviction with it. And you will. Do you believe FOMC on Wednesday will affect PA tomorrow and Tuesday? Yes. 8 months into trading and first month in TT, I have felt like I have learned so much from you and the others. I have seen much growth with my trading. Just so happy with myself and proud of you for showing all these people hope and showing them that it's always possible. I didn't know what I wanted to do a year ago and started studying this, and I'm so happy I started. Let's go, Kevo. Keep it up, brother. Looking back at Friday 156 trade, why didn't you take longs on the fair value gap? I did. I did. I added one can I show my... I don't think it... Actually, no, it's past the time, so I can't show it, but... Actually, I think I have the executions. I added one contract, and then I added once we came back. So I did. I added one in this fair value gap. When we came to the order block, I added another one. When do you know it's safe to drop out of school and trade full-time? When you have 6 months of profitability. This is why those outside the ICT world don't understand. They think we trade patterns, we trade narrative and structure. Exactly. Everything that has to do with context. Thoughts on Euro market maker sell model? Beautiful. This looks clean. Very, very clean. Love this. All these annotations is exactly what I want to see, and it shows me that you know what you're talking about. SMT at the highs. This displacement move. This wick comes back. Internal sweep. Displacement. Low risk sell. Immediately sells. First stage distribution. London sell side. Beautiful sell. Great entry. Great entry here. Great entry here. Now, again, best entry here would have been here, right? This is a little bit lower because this internal low has been taken. But again, we know there's a reason to go lower. Whenever somebody looks at this, again, how many of you guys would look at this and say, oh my God, sell side's taken, I'm not going to short here because we're going to run higher? Why does that not happen? What are we doing here? Rebalancing to rebalancing to an inefficiency before continuing lower to finish the model. We're in a market maker sell model. When we take lows, there's not a reason for us to bounce back higher. We'll bounce back higher because we generated liquidity. What do we then do? Rebalance to an inefficiency before continuing lower. What did we do here on Friday? External draw is still lower. Standard deviation projection is still lower. We come down, though, sweep this low, form relative equal lows before bouncing, rebalancing to the inefficiency before continuing lower to take sell side liquidity. We're doing one of three things all time. All the time we are doing one of these three things. What tells you to wait for the second entry on a trade instead of taking the initial entry? For me personally, if I don't have conviction taking the first entry, like I think that it could be the short or I think it could be the long, but I don't have enough confidence in it, I'll wait for it to hold to give me validation of the model, and then I'll take the second entry. But all has to come down to if I have conviction in the model, because there's times where I will wait. There's times where I'll wait for the first entry to hold and respect and show me what the model is, and then I'll take the second entry and I'll look for another entry. Sounds like a bit much. What do you think? What do you mean? Bias going into Monday is bearish. But it really all depends what happens in the overnight session. Did you see ICT tweet about him predicting his percent? I did. Will I think he does it? As much as I don't know. I really don't know. As much as I want him to, it just seems like such a crazy thing. I feel like it's just too crazy. What did he say? He's going to beat Larry Williams by 1% exactly? Or he said he's going to let Larry Williams keep the record. San Fran just tied it? No way. What the? All right, we're ending the session. That's crazy. All right, any last questions for me, guys? I have money on the 49ers. Much love, Russ. Have a good one, brother. Link for the chart? I got you. Yes, sir. Let's get ready for a great week, guys. Just wanted to show you this. Ever since I joined TT 3 months ago and gaining so much as a trader, thank you, Justin, I've decreased my size since December, slowly at break out of that break-even stage. Again, this shows me you're right on the edge. You should be excited. Any trader that you are getting to the break-even point of your trading career should be the point in which you are on the edge. The break-even point is a great place to be because all it takes is just a little tweaks for you to start having that steady consistency. So keep it up, brother. You're killing it. All right, guys. Enjoy the rest of your night. Get some rest. If you're going to go watch the football game, I wish you best of luck on whoever you're voting for. But enjoy the rest of your night, guys. I will see you all tomorrow morning. Peace.